Well, it's a real pleasure to be back on StockCharts.com following up on my recent presentations. I've got some really interesting information for you today about will we go back to new lows? Will we retest those lows? What's the future of the stock market? What's the future of America given this pandemic that we've seen? I've got a lot of data I'd like to share with you, so let's get started. I always go back to Barry McGuire's song, The Eve of Destruction. If you remember Barry, he started with the New Christy Minstrels, then he did The Eve of Destruction. You're too young for voting, but what's that gun you're toting? And that's kind of what a lot of people see where we are right now, the eve of destruction. Are we on the eve of destruction? That's what I want to focus on in this presentation. It was an interesting song. Go back and Google it if you haven't heard it for a while. It was the driving force behind the 26th Amendment that Richard Milhouse Nixon signed that gave the voting right to kids over 18 because we're going to Vietnam. And I think the line in the song was, you don't believe in guns, so what's a warrior toting? You're old enough to kill, but not for voting. And that really changed the voting ages in America. So are we on another pivotal change in the history of this country, economically, stock market wise? Well, there's so much stuff going around. The virus is China's plan to destroy the world economy. There's so much stuff going on. Sell, 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 sell all over the place. Everybody's in a panic mode. I want to get to some real bottom line to this. And more importantly, for those of us who are in the stock market, where now? What next? I'm going to answer this question with some really amazing data for you on what the recent rally means and about going back to new lows. Well, the virus, here's some really good news it's in. This is the chart that shows the total cases, and look what's happened throughout the world. We've seen a reduction in new cases. In other words, we're starting to see the end of this thing. Oh, it's going to be here for a while, without a doubt. But we're getting closer to it because you can see we've had a rollover effect. And that's good news because we're starting to get some control over it. In fact, of the 15 countries with the most confirmed cases, all but one have seen a peak in daily new cases. That is really encouraging news that this pandemic has a cycle to it. A, B, we've been able to attack it. Not just America, but countries throughout the world have been able to get on top of this, get some control over it. So we're in a lot better shape now than we were, say, a month ago. That major countries, and we've seen a rollover and the daily new cases. I think that's very, very encouraging. So, but other people are saying, oh, there's a 16-year plan to destroy America, on, yada, 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 these people go. There's just no reality in this. Don't get sucked into the mongrels in the media and these views of negativity. The purveyors of pessimism have always been wrong. We've always gotten through stuff. We'll get through this. We got through the Spanish flu. We got through the Hong Kong virus where 1 million people died. We'll get through this as well. So let's have a hard dose for reality here. All pandemics, all of them follow a specific curve, an S-shaped curve. And once you understand this curve of pandemics, you're going to have a lot better view of understanding what's going to happen in the stock market. So I'd like to show that S-shaped curve to you. This is a basic curve that you see in pandemics. If the pandemic is going to kill everyone, everybody's going to get it, goes just like this. But in fact, what pandemics do is the blue line. Everybody starts to get it, and then the pandemic starts to roll over. And we start to be at the end of it, whether it was swine flu, whether it was a Hong Kong flu, all of these, this is the curve they follow, this F-shaped curve, not where everybody gets attacked. That's the pandemic curve. Well, interesting point. That's a curve, but where are we now? Well, a good friend of mine, Mike Stock, who's a thermodynamics engineer at a major company, did some data for me, and this is where we are now on the curve. This is what would happen if everybody got it. This is the curve that we're on based on recent data. The blue line, we're starting to hit the extra point in the curve where it rolls over, and we're going to see a steady decrease in what's been happening. So that's the basic curve. With the current data that we have, we are tracking on that curve. This is a little blow up of it. You can see it better. The orange dashed line is a pure exponential if this were to take over the world. This is a reality, though, hard dose of reality for the gloom and doomers. This is what's actually happening. We're starting to roll over. Max value is going to be reached pretty soon, and then we're going to see this S-shaped curve come to the downside. So that's the theoretical curve of it. And that's good news because that's how pandemics work. It doesn't matter which one or when, they all have this S-shaped curve to them. So what we want to do is look at data. How is data fixing now? Is it coming into this, out of it? How are we doing? Well, the maximum value that my friend got is about 600,000 cases. That's about how many cases that we should expect to see. And that's a pretty good projection. If we start to warble from that, we'll know we're in trouble. If we start to be under it, we know we're really doing much better in control of this. And when it ends, think about this. Just consider this. When this virus, this pandemic ends, and it will at some point, maybe it's 10 years from now, maybe it's 10 days from now, but when it ends, stocks will rally, just flat out will rally. You need to keep that in mind. It's interesting, if we look at the forecast death peaks, this was a forecast made a while ago for death peaks in the United States, and it should peak about April 16th. That was the forecast, right? So how did the forecast do? Are these forecasts good, bad, indifferent? Well, this is where we actually are right now through today. The data just posted today. And in fact, the peak was 3 days ago. So we've seen the peaks in deaths per day in America. We have started to roll over. So the forecast that we saw back here was in fact a good forecast. These people are doing a pretty good job of it, and we're on target. That to me is really good news for us, that this is a trajectory that can be forecast. We can see that there's a future, and this thing is not going to destroy the world. In fact, if we look at state projections, and we have these projections for every state, New York, Illinois, Washington, Ohio have all peaked, all of them. California peaks in 2 more days. Florida, 14 days away. Massachusetts, 14 days away. Texas, 15 days. Pennsylvania, 4 days. What seems to be going on here is the states that got hit with the virus early, like Washington and New York, obviously are going to peak earlier than ones that got hit later. So Massachusetts and Florida got hit later than the other states. So that's when we see their peaks. But these are the biggest states in America, aren't they? And we see the peak in the biggest states left, Florida, Massachusetts, Texas, um, somewhere in the next 12, 14 days, that peaks. That's going to be constructive, I believe, for the stock market. And the fact the major states like New York, Ohio, and Washington have already peaked also has to be considered a very positive direction for the market. But this is what all this stuff does. It has just slammed the economy. Boom, put the brakes on. Look at gross domestic product. This is a major from the Federal Reserve System. And it's just plummeting to the downside here, just coming straight down. Yeah, we've got a horrible economy because people aren't working. One of the best indicators of what's going to happen in the economy, recessions, is unemployment rates. The blue line you see is the unemployment rate, and we've just recently risen above unemployment rate. When we rose above it in 2007, we began a bear market, we began a recession. The same thing has happened now. We have raised above the red line, so we are in a recessionary time period because people aren't working, they're not making money. So bad news here. Yes, we are in a recession. The question is, how long will the recession last? And what will tell us when the recession is over? Those are telling questions we need to have answered. There's so many purveyors of pessimism out there. Bill Bonner from Agora Publishing, I call him gloom and doom publisher, said the Feds will always find new ways to make it worse. Hello, Bill. The Fed has made things much better. They got us out of the 2008 debacle, out of 1962, out of 1966, out of 1970, out of 1974, out of 1987. So again, my point is, don't get too carried away with these purveyors of pessimism. They love to have all this negative news that we gotta get sucked into. Instead of looking at that, look at actual hard facts. That's what we're doing today. Presentation of data, historical references, so you can make a decision as to what you think is going to happen. Oh, even our doctor right now, I don't think we should ever shake hands again. Come on. Hello? We're never going to shake hands again because of a pandemic? This is the type of stuff that's out there, and I think we just have to be very cognizant of it and not get too enamored and carried away with this stuff. So I'm going to say, hold on to your hat here, Bill. Hold on to your hat here, doctor. Let me give you some numbers about recessions. Here's the history of recessions. The average length has been 10.2 months. 7 of them have been less than 11 months. Of course, we had 1929, what went on for a long time. Will we have that again? No way, because the Federal Reserve was not very operative back then. Since the Federal Reserve went into really understanding the market and getting involved in it in about 1947, these recessions, we've had them, we'll have them in the future. We've had bear markets, we'll have those in the future too. They've been relatively short in duration, a relatively short time period. So less than 11 months, we've already got 2 months behind us, so we're 9 months away on average. Of course, this could last a lot longer. But is there something that will tell us when the recession is over? That will give us an alert, an early warning that, oh, we're going to pull out of this thing? Absolutely, sure. If we know we've got control of the virus while the recession is over, people will go back to work. Because right now, the entire world, especially America, we're quarantined. We can't really go to work. Oh, online, but you probably don't do as much online. You don't go shopping at Macy's or Costco as much, all that stuff. You have to have that for a good economy. So let me give you a chartist perspective. I'm going to go way back to 1958. You're going to see the blue line you see in your chart here is when my panic indicator gave a buy signal. And I'll explain that in a moment. And the red line is when the recession was over. So blue line, stock market buy signal, red line, the recession is over. And in 1962, blue line, stock market buy signal, the recession was over later on, was announced. So what do we see here? Well, let's look at my next chart. The 2007, 2008 bear market, there are panic buy signals. Oh, the recession is over. What we see is that we get buy signals in our panic indicator prior to the recession being over. Got it? In other words, stocks lead. Stocks can tell you in advance when the recession is going to be over. What a breakthrough that is. Stocks bottom before the recession is over. So if stocks have bottomed, you have a really good idea that the recession is about over. Stock panics, and that's what I've marked off in the chart. So the blue lines are when we've seen massive times of panic. When we see massive times of panic, then we're close to the recession being over and a buy in the stock market. As you know from my recent presentations here, we just recently, about 3 weeks ago, had a panic buy signal. The Dow Jones Industrial Average has rallied, what, 3,000 points since that buy signal? 3,000 points? That's a huge rally, isn't it? So if stock prices are the best leading indicator, the only question we have is now, where now or what next? Are we going to go to new highs? We're going to crash down here and go to new lows? Exactly how bad is this going to be? Is there anything that can tell us or suggest to us what's going to be taking place next? There is. I'd like to share that with you now. This is a really important study I just completed. You probably want to get a pen and pencil and take notes. I'm now going to show you what I believe is going to happen in the marketplace based on some research I did that just really fascinates me. You ready for this? I'm going to take you back in time to 1929. There was a big crash all the way down. Now notice these rallies. None of them were very big. In fact, we couldn't get a rally of 50% until 1930, late in 1933. Then we got a 50% rally. Now hold on with that figure for a moment. When we get a 50% rally, here was a bear market in 1934. The market came down from here to here, bounced around, finally got back 50% of the down move, and a bull market began. I'm going to show this model another time. This was in 1938. The market declined from here to here, bounced around, rallied, oh, it made new lows, rallied, made new lows. But once we got a 50% retracement of the entire down move, a bull market began. In 1942, there was a down move from here to here. We rallied, we couldn't do anything. Finally, we got above a 50% retracement and stocks scrambled to the upside. So the point that I see here, and here's an example of 1947, the market went down. It tried to rally back 50%, couldn't. Finally, it did, and eventually we took off to the upside. It appears to me that if we have a 50% rally, this was 1953, we came down, we could not rally 50%. Finally, we came down and we did rally 50% and the bull market began. So here's the message, guys and gals, fellow traders and investors. when we see one of these bear markets, if we can rally back 50% of the bear market, the bull market has begun and we will not retest the lows. That seems to be the message here. How strong of a message is it? Let me show you. Here was 1958. Market came down, rallied, tried to retest the lows, did retest the lows. Oh, we finally got above the 50% correction. Big bull market began. Pretty interesting. We've seen that pattern now from 1933 forward. How about 1961? In 1961, we had a nice bear market. We came down. These rallies, we didn't decline 20% yet. Finally, we did. The market finally moved up, got above a 50% retracement, and away it went back on the racetrack. In 1962, we went down to the 62 low. That was caused by President Kennedy rolling back steel prices. The Cassandras, I remember this was my first bear market. I remember this clearly. It was the end of the world. The Cassandras all came out. Again, the purveyors of pessimism all over the place. Oh, we did not rally 50% though, did we? As you can see, we didn't rally back 50% and we did retest the lows. Then we came back a 50% retracement and again, off to the races. Now we've seen this pattern a lot and we continue seeing this pattern. This was 1966. I remember this so well. Oh my gosh, I got short at the right time in here, but I got short in here and I should have covered my shorts here and didn't. Oh, and away went the market. Oh, painful experience. Still remember that. As long as we didn't have a 50% retracement going back half of the rally, half of the bear market, will try to retest lows. But once we got above a 50% retracement, we're back in a bull market. Choppy bull market, but nonetheless, no retracement, no new lows, and a further extension of prices to the upside. In 1969, it's another one of those painful experiences. I remember this quite well. Got long here. A lot of us did. We bought here. And then, oh my gosh, the market fell out of bed. Why? We didn't retrace 50% of the bear market decline. Oh, I wish I would have known that. Tries to retrace 50%, but it can't. And if it can't retrace 50%, yes, you can retest. Yes, you can go to new lows. That seems to be the message from the market. Well, this is what we were just looking at. In this time period, finally, we made new lows. We did get a 50% retracement, and away we went to the market. You could almost say that if you want a bull market buy signal, if you want to know we're out of the recession, we are out of the recession, it looks like, when the market has been in a bear market and has rallied back 50% of the loss. This was 1973. We're in a bear market. Had a big decline. The market could not rally back 50%. That's the red line. Not only did we test for new lows, we made new lows. Again, the same pattern that we've seen. Here was 1975. Bear market, we came down. As long as we don't have a 50% correction, you can stay in the bear market. Well, we had a 50% correction. Away the market went to the upside again. 1978 went down, came up. We had more than a 50% correction, and stocks muddled along and went higher. 1982, stock came down, couldn't rally 50%, finally rallied 50%. Notice in this time period, you're wondering, is this the start of a bull market? We don't know, but since we don't rally 50%, we think, no, it isn't. Finally, we rally 50%, and away again we go to the upside. 1987, big crash of 87, similar in some respect, but for different reasons that we saw now. And the market tried to retest. Finally, we get above 50%. Bull market begins, a huge bull market. Okay, 2001, we had a big break in the market, pulled back. It could not get a 50% reaction. Now, notice I'm using the S&P 500 here. I'm using weekly closes. We had to have a 50% retracement and closing above on a weekly basis. A week or 2 weeks, whatever, but clearly that seems to be the rule. The bear market continued. We retested lows and made new lows. So this is what happened eventually in 2003. We did have a 50% retracement and the bull market began. 2008, 2009, there's a huge decline that we had. None of these rallies were 50% of the decline. Finally, we got it. It took a long time, but we know we're back in a bull market at this point. So will we retest the 2019 lows? Remember that we had a kind of a bear market in 2019. There was a decline into the end of 2019. We immediately came back to the 50% correction. The markets went to the upside. So I know you're wondering, where are we now? Well, I'm going to show you that in a moment, but the lesson here is if we rally more than 50%, the bear market recession is over. I've shown you 20 times, and the last 20 times, that has been a truism. When we rallied more than 50% of the bear market decline, the bear market is over, the recession is over or has been over. Sometimes the 50% rally is prior to the recession ending. Sometimes it's about the same time as the recession ending, but it's been a clearly very strong indication that we've turned the corner here. So where are we now? Guys and gals, we are at the moment of truth. Look at this. Here's the Dow Jones Industrial Average. There's a 50% retracement. We're right there. That's the Dow Jones Industrial Average. If we look at the S&P 500, we actually closed above it this last week. Just right at it, just right above it. So any additional strength in here, closing above that 50% retracement, I think is very bullish. We are at the moment of truth here. If we can have a little bit more strength, a little bit more resilience in this market, we're going to see that, in fact, the bear market is through with. Now, why could that be, and why can that happen so quickly? Well, there's a couple of takeaway points here. First of all, stocks bottom with panic selling. We talked about that earlier. Panic selling takes place before the recession is over. So we had the panic selling, our panic buy signal came here. So we've had the panic selling in the marketplace. That brings value buyers into the market as the market has become way overextended. But more importantly, I think, is what causes these recessions, what causes the unemployment. Was this recession caused by inflation? No. Excess speculation? No. We didn't have real high PE ratios. A downturn in the economy or a bad stock market? No. What caused this recession was this, the virus, right? If it hadn't been for the virus, we'd still have smooth sailing, but we had an abnormal event take place, and that's what caused the recession. So put that in your thinking. This is what caused it. That's what caused the bear market. So what ends this bear market? What ends this recession? Well, clearly the virus dying out. An effective treatment, a vaccine, or if everybody got exposed, I guess nobody'd have it. It wouldn't be a threat anymore. Eventually that will kind of happen. That's part of that S-shaped curve. But what we see is that this recession, unlike the others we've seen, was not caused by inflation, excess speculation, the economy falling apart. The reason people are unemployed now is because they couldn't go to work. We quarantined ourselves. The government said you can't go to work. So once the government says you can go to work, glory, hallelujah, guys and gals, we're going to have a huge stock market rally. America and the world are going to get back to producing stuff. So this is the key thing to watch here. Now, remember, I showed you earlier those forecasts, those projections of 14 days from now, California or Massachusetts will see the curve roll over. So we know that we're approaching that where the virus is dying out, where this effect will not be as strong as it once was, and President Trump will get us back to work. Don't take my word for this, though. Not at all. Take the word of insiders. The ratio of companies with insider buying compared to insider selling was 1.75 for March. It's the highest level since March 2009. Remember March 2009? What a great place to buy. This is from Washington Service. They provide insider trading and data analytics. So insiders, people that work at the companies, own shares in the company, they saw this as a buying opportunity. Did they panic? Did they run? Did they cry mama? No, they bought stocks in their company because they believe in the future. Now, a week later, it's even more so. Corporate insiders are frantically buying up their own stock. Bloomberg News. They're buying stocks at breakneck speed, their stocks. In other words, the people that work for these companies really believe in the future. They really believe in their companies. This is the good news. People only buy stocks to make money. So if you're working at a company, you're not buying the stock to do anything other than you think the future is good and this company is going to come back. Historically, Historically speaking, when we've seen large numbers of insider buying, have been very bullish for the stock market. Will this time be different? Oh, it could, but I doubt it. That's not the way to bet it, is it? So really good news that is informed money, people that work for these companies are buying stocks in their companies. Last Thursday, we had some really bad news. About 6.6 million Americans filed unemployment benefit claims, and it'll probably get worse because I know people that have filed unemployment claims. They can't get processed. The lines are too long. So we're going to have more bad numbers coming. How did the market handle that? How did the market take some really negative news? Oh, there it is. Look at that day. Nice strong up day on Friday. Now we're down on Monday a bit. We may have a short-term top in here. I suspect we'll pull back and rally a little more. I'm going to show you that in a moment. But here's something else going on. While we had people filing for unemployment claims over the weekend, I talked with quite a few people that own small businesses and some not so small, and they have all applied for loans. And those loans are loans you don't have to pay back as long as you use them to pay salaries. So they're queued up. They fill, it's only a 2-page form is all you have to fill out to get the loans. And so we are going to have money in circulation. People, even if they're not working, will get paid. Maybe not as much as they were making, but they're going to have money, discretionary income. So this whole thing about the Federal Reserve destroying the world, I don't think so. What they've done is brilliant. They're going to keep money circulating. They'll keep things buying. They'll keep people happy. So, oh my gosh, it's not nearly as bad as the Cassandras are making this out to be. And don't forget, we're in an election year. That's the average of what happens in election years. Coming up, there's a buy point about a month from now, and typically we see strong election year. Well, Donald Trump wants to get reelected, doesn't he? I'm certain of that. So do the Republicans in Congress. They want to get reelected. Election years, it doesn't matter who the dirty dogs are. They tend to be very positive years, and I expect a similar path to this, with these being important buying opportunities. Short-term cycle forecast also, I'm using timing solutions for this. The way I look at short-term cycles suggests the current rally we're in probably is going to go until the first week of May. Then we can have a pullback and a buying opportunity around the first part of June. So that's my very short-term cycle forecast. You can take a look at that and see. We can have a little bit of pullback in the air, a further extension. Hopefully that'll get us even further above the 50% correction. Getting and holding above that 50% correction is a massive learning experience for us. Well, come trade with me. I have one more chart to show you, but if you like what you've seen, come trade with me. I do a weekly market commentary. It's only $30 a month. You can go to our website, ireallytrade.com. A lot of free information there. If you like what you've seen today, there's even more on the website. Here's my forecast based on the federal funds. Federal funds fundamentals really matter based on what the Federal Reserve has done. We're getting into a buy point coming up the end of this point and into May, and then we really start to take off to the upside. So fundamentals also suggest that we can hold these levels, bit of a pullback, and go higher. Wouldn't that be a great thing to have happen? So as I see it, the doors will open again for sure. So don't get carried away with these negative people. There is a future. You've seen some good reasons why. The 50% rate retraction that we had, a reaction in the marketplace, that's very positive. That the virus will be starting to fade out, that's positive. We've seen a panic indicator buy signal, that's positive. We've seen the Federal Reserve encouraging economic growth, that's positive. So fellow traders, the doors will open again, that's for sure. That's a bet you can bet on. So you want to be a buyer and pullbacks in this market. Good days are coming. Until next time, this is Larry Williams wishing you good luck and good trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.